Friday was a big day out of the United States, and that just affects everything. Everything that we were looking at. The equity started to move lower. The dollar starts to bounce, and we start to see the product that I'm going to talk about today, which is gold. Now, the reason I think gold is so fascinating right now is because we've seen gold struggle to reach some highs. Now, I'm going to share the screen of just the chart just right now, and then we're going to get to the data and see if the data sort of really backs up the idea here. So what we've got right now is let me just do that. Thank you, Gary. The heat map works well. That's fantastic, mate. So look, this is really important. I think this is a key thing that happened. What we've seen with gold is it unable to get any kind of traction. Now, considering what we've got going on in the world and the arguments for owning gold should have been flying. It should have been flying a long, long time ago. We've had the conflict in Ukraine. We've got this inflation narrative kind of coming out. But why didn't gold start to move higher? Well, one of the main reasons is because the bond yields were choking gold. As the bond yields started to move higher, nobody was really sort of interested in gold. And the other thing was, when people started to sell everything that was risk on, they had to get they had to kind of rebalance portfolios. So they'd also sell gold alongside of it. But what we saw on Friday was a fundamental shift in the narrative, because gold actually put in this bar. This is Friday's bar. This is Friday's bar from gold. This is Friday's bar from the NASDAQ. Two completely different things were going on. You see here, gold NASDAQ moving to the downside, gold moving to the downside. So people were taking profit when they were selling the NASDAQ. They were also kind of like getting out of their positions of gold. NASDAQs, S&P, anything that you choose to mention. But this is a very, very significant bar. Now, it's not only a significant bar of the way it looks. We know what type of bar it is. You can call it what you want: engulfing, decisive close. A bar which is kind of like managed to swing from the lower end, take out the stops, and then get back to the highs. It has got a very, very distinct anatomy, this particular bar. But the most significant thing is that it was off the back of those CPI numbers. Those CPI numbers should have driven those bond yields higher, which they did for a period. But look what it ended up doing to gold. So we've got a very significant bar off a very significant number. And that would send a very strong message that gold is now a buy. So now what we want to do is flip to the data. Does the data back this up? Now, when we go over to the data, the fundamentals, I'm sure somebody will deal with gold, but the fundamentals are good for gold as well. But look at the data. Let's start with the seasonal pattern here. A low tends to come in on the gold price around about mid-June. This is June, this is July. Around about mid-June, we see this low put in, and then we see this sweeping move, a long, long move to the upside, right the way through to around about mid-October. So second week in June, perfect. Monday, tomorrow, basically is the start of that particular period. We're on the 13th tomorrow. So this would coincide beautifully with the bottom that tends to be put in, and then the sweeping move to the upside. Does the COT data back that up? Well, we can look at it in a simple level and look over here. 95%, 93%, 100% on the 36, the 18, and the 6 month, respectively, index. Now, the closer it is to 100%, that is basically telling us that the index is in the buy zone. So very close to 100% on the 36, very close on the 18, and right on the money on the 6. And if we look down at the actual index on the visual, look at it, right the way up the top. Now, the last time that we saw this was all the way back in 2019. Look at this. Well, 2018, sorry. 2018, it was right up here. And look at the rally that came off the back of it. So really excited about gold this week, mate. I think that there's very, very little in the way of arguing against it, which is fantastic. This is the kind of thing we want to see. The fact that it was off the back of those CPI numbers just adds some more fuel to the fire. So gold for a long next week. I don't think there's anything quite as clear as that from what I've seen.
Mate, really love it. Looking forward to getting to the market. It has been, I think now, maybe 15, 18 months since we've seen a really decisive picture on gold. And if you think that the data is giving us a really decisive picture on gold, that is big news. I'll be watching with that. Always when you've got a really decisive picture, that doesn't mean we go on Monday morning, we buy gold. We're still going to look for a good price. We're going to look for good opportunity. We're going to look for the right timing. But we are going to be looking at gold this week to see if we can find those moments to get into this market and potentially follow a similar type rally. That rally you're talking about lasted nearly a year, nearly 2 years. So
yeah. 2018, really, 2018 to 2000. Yeah, you're absolutely right. Yeah.
No need to rush, right? Just take our moment, pick our times, and perhaps if we can build a position here over time, if the data continues to support it. What will be really